For how long have you been paying yourself the same wages from your company? If it's been a while, you should ask yourself some questions. Has your personal financial situation changed since you've set up your wages? Has your company's profitability changed? Has your company's cash flow changed? Does the company have enough cash flow to operate and grow? Is the current wages still tax effective? And do you have a superannuation strategy? And are the superannuation contributions from your company in line with that? In personal life and business, things change all the time. So if you have reflected on these questions and see that some things have changed, it means that it is probably time to also change your wages. And it doesn't have to be a complete overhaul. But in my experience, I've seen really two extremes. And I'm sure you're not in these extremes. You may be in the middle. But I've seen business owners that pay themselves too little and others that pay themselves too high wages. Those that pay themselves too little, normally they would have set their wages when the company was just established or before growing. And of course, it's great to leave cash in the company if the company is growing, but at some point, this business owner must consider withdrawing extra wages from the company. And of course, there's other ways. There's also dividends that can be considered, but that's not the purpose of this video. On the other hand, I've seen business owners taking out too much wages. And this happens if, company is established and the business owner has need of personal commitment, financial commitment. So it does need more cash, but it becomes a problem when the company cannot sustain the wages and it gets behind with other payments of pay-as-you-go tax or GST. So in those cases, business owners could consider reducing their wages, and of course they can look at the other costs as well, but making sure that they can withdraw that much wages only if the company can afford it, essentially. And you're not going to be in those two extremes. Probably you're going to be in the middle, but even then there is still scope for making some tweaks. And it's always good to go through this with your accountant. They will be able to really make more accurate calculations for the tax as well, because of course your wages are tax deductible for the company, but you have to pay income tax in your personal name. Your marginal tax rate may be higher than the company's income tax rate. So your accountant is able to help you to balance that off. Also, if you have a strategy where you want to make additional superannuation contributions in your fund, then it's also good to check in with your accountant, because of course there are tax benefits because the superannuation tax rates are set at 15% now, and they're lower than the company tax rate, but that really depends on your situation as well, because there's a contribution cap, so you cannot go over a certain amount, and there's also an income threshold as well, and there's more tax to pay if your income is over a certain level. So, and there's paperwork to do as well. So always check in with your accountant on the best way to do. There may be some paperwork. Always check with your accountant on the best way to go about it. Make sure that your wages are not a set and forget. Make sure you review them at least every year with your accountant.